Hello and welcome to a very special episode of Black Box. We have been working tirelessly to get our second trading bot up and running. Right now, we have the Tether margined trading bot available on blackbox.pro, and we are now launching the Bitcoin margined trading bot. This is very exciting. We've all been waiting for this. The team specifically has been waiting for this. We all trade coin margin. We don't trade Tether margin. In the video, we'll go over some of the differences. We'll also create a few other videos that go through the tutorial process as to how to fund the account, how to launch the bot, any questions you might have in regards to setting it up and getting it up and running. But in today's video, I want to just make the announcement that the bot is now officially live, and there is going to be tutorial videos on how to set it up right here. If you just want to dive right into that, go ahead. And I'm going to explain what the differences are, why it's important, why we're excited, and why it's coming at a perfect time in the market as we prepare to transition into phase 2 of the bull market. So let's get into it. Hello and welcome to Black Box Trading. I am your host, JT, and here on the channel we focus on crypto fundamental analysis as well as technical analysis, and we offer a free Bitcoin trading bot, which is going to be the topic of discussion today. So, coin margin. Why would you want to choose coin margin over Tether margin? You know, a 10% move in Bitcoin, I want 10% more dollars. A lot of people think in dollars, and the market has shown us very clearly that Tether margin futures have much more liquidity, much higher user adoption than coin margin. But in my experience, it's way easier, way more satisfying, and way more profitable to be trading on a coin margin futures. All right, so if you are in the Discord, we do have a guides channel. You can just scroll down to the support section, click on guides, and we're gonna have all of the different guides and tutorials for these bots, how to connect the exchanges, how to get the bots up and running, how to take profits, how to add. All of that stuff will be found here on guides. So feel free to pop into the Discord. If you ever want a curated collection of all of the information that we have provided, go ahead and check that out in the Discord. Just go to blackbox.pro, BLKBöX.pro, click the join community tab, and we will get you inside the Discord. But yeah, coin margin. Why? What's the difference? Well, the biggest difference is you're getting paid out of your contract denominated in the underlying asset. So what that means is, typically speaking, when you buy a futures contract, you're going to take US dollars, you're going to purchase a Bitcoin long, and if Bitcoin goes up 10%, you're going to receive 10% more dollars. Why coin margin is better, in my opinion, is if you post Bitcoin as margin and Bitcoin goes up 10%, you get 10% more Bitcoin. So this is kind of a parabolic curve. You get much more yield on the coin in the context of a long to the upside. So this can really stack up and be quite favorable for those who want the bot to focus on making them more Bitcoin. But of course, every trading strategy comes with a downside. There's obviously a trade-off with this. If you go to your portfolio and you're measuring performance in dollars, when you have a successful short trade on Bitcoin, yes, you're making money. Yes, the trade is successful, but you would have made more money if you chose the Tether pair. You would have made more dollars if you chose the Tether pair. You still make more Bitcoin. Okay, I want to be very clear on that. If we short it and it goes down 10%, you still make 10% more Bitcoin. But if you're still in the mindset of, okay, I have this much Bitcoin and it's worth this many dollars, you're going to look at that and be like, oh, I guess it wasn't that good. I should have been on the Tether trade. But for those of us, again, who are, looking to stack sats and increase our Bitcoin position, our Bitcoin portfolio, we want our portfolio to grow in terms of sats, it's still a win, even though the dollars don't reflect that. And I'll go through a few examples here with the yield here. So this will really paint quite a clear picture. I'm going to go back to basically the COVID dump. Okay. That would have been a very opportune time to buy Bitcoin. A nice bear market capitulation, getting ready for the bull market. So a lot of people panicked out of their positions during the COVID dump, and it would have been an opportune time to buy. So let's say you bought at the close. It's around 52.50. We're just going to keep it nice and simple. We're going to say $5,000. So we're going to go into the strategy, and we are going to select $5,000 worth of initial capital. We're going to change that over here as well, $5,000. And if you put that into Blackbox, your performance today would have yielded you $111,000, $111.5 thousand. So you went from $5,000 to, we'll just call it $112,000, and you did so in 11 trades. Amazing. That's certainly nothing to shake a stick at. But here's why coin margin is so much more powerful. Let's do the exact same thing, the exact same 11 trades with different parameters. So instead of $5,000, we're going to put in 1 Bitcoin, because during the COVID dump, 1 Bitcoin cost around $5,000. So we're going to put 1 Bitcoin in, change the inputs down here to 1 Bitcoin. And now with the exact same 11 trades, you have 22 Bitcoin, which is just, at the time of recording this video, just under $800,000. So you went from $100,000 worth of profit. Amazing, amazing. There's nobody upset with that, taking $5,000 to $100,000. But with the Bitcoin coin margin, you have $800,000 in Bitcoin. You don't even have stablecoin exposure. So that's kind of the point I'm trying to make here. We do get the question quite often, why are we using futures contracts if we aren't using leverage? And the answer to that is we need the ability to long and short. And when you long, at 1x or zero leverage on a coin margin, you are still kind of getting leverage because you're being paid out in Bitcoin. You're being paid out in the sats denominated contract. So it kind of is leverage, and it's leverage without a liquidation price, which, if you've been playing in the futures markets, those liquidation prices can get hit, or they can cause you to struggle to sleep, or they can cause you to constantly refresh your phone and develop some sort of mental problem where you need to look at the quotes every 5 minutes. Leverage can really crank up your emotions, which doesn't set you up for success as a trader, because emotions are a money killer. So if you have access to leverage with no liquidation, it's very powerful, which is why we chose to build the bot the way that we built it. So yeah, if you want more information, please go to blackbox.pro and sign up. All you need is an email and link it to one of our partner exchanges. Currently, we are only partnered with BitGet, but there are more exchanges being onboarded in the coming months. If you enjoyed this content, please leave it a like. Don't forget to subscribe and share this video with anybody that you think would benefit from a free Bitcoin trading bot. Portfolio management on autopilot. We're very proud of this. We want it to be available. It's free to use. Yeah, go check it out. Blackbox.pro. Trade safe. It's a jungle out there. Peace.